for you guys to check it out. Okay, so this is gold, guys, on a weekly time frame. This is how it looks. Okay, so we have been analyzing equally using this structure from here, saying impulsive correction, impulsive correction, and then actually we did catch this impulsive. If you can go to my YouTube channel, you would see that this impulsive catch, this impulsive move have been caught. You see, we managed to catch this impulsive move. It was a good one. So now the only thing that we needed to do is that we can't be using this structure as the main reference. Now the market has given us some sort of like changes, which can be which can be more like, now we are gonna deal with the impulsive move like this. You're gonna be dealing with something like this: impulsive S1, and correction S1, and the new impulsive is the second thing. You see, so this is a structure that we are currently dealing with. We can't be looking into between. We're looking in between of the substructure, because remember I said we have got a 1 hour, 2 hour, daily time frame, things that are happening there, which are in a way forming a structure of the higher time frame. So the structure of the higher time frame has been formed, and then it's in a certain um, shape that we want to see. So there's not really that much that we need to concentrate too much on one of these impulsive phases. We can also use the entire structure, like impulsive, correction, impulsive. But now we're still gonna look at this impulsive phase on its own. We're gonna look at this impulsive phase on its own. So if we look at that impulsive phase on its own, you need to again to say what this is: a impulsive is one thing, like this being one impulsive, and then this being one correction, like this, and then this being another what, another impulsive. Let's just say this is the end of this impulsive. So we have something which looks like this. We have something which looks like this: impulsive, correction, impulsive. So which means now we going to concentrate on this last impulsive phase. We already passed this, and then now, which means the market is currently in this last impulsive. So what I can say is that we can just concentrate on this last impulsive phase. We can just concentrate on this last impulsive phase. Let's just go to daily time frame. So on this last impulsive phase, as you can see right here, on this last impulsive phase, now we are having some sort of like, if let's say we can use Fibonacci retracement zone, because for every impulsive move the market needs to have its correction. For every impulsive move the market needs to have its correction. So we can assume for now to say that this was our last impulsive move. So if this was our last impulsive move, we still expect the market to give us a retracement to our golden zone area. We still expect to see our golden zone area. So guys, if you do not know how to use Fibonacci retracement zone, I'm still saying this. We have a video. We've got video of my strategy being uploaded in my YouTube channel. You can just go there. And then you will learn how to use Fibonacci retracement. I did post a video which has an explanation of Fibonacci retracement, how you can use Fibonacci retracement the easiest way. So by looking at this gold setup, you could see that in a way, even though there is this week, but in a way this is more like some sort of like a double top. It's more like some sort of like a double top. So if this is more like some sort of like a double top, therefore this one is going to act as more like a neckline. So if the market really does play out the way it looks, therefore which means we can have something that is gonna be like this. And then if the market uh, decides to respect this golden zone, therefore we might still shoot up. It will just depend on how strong it pushes towards the downside. But because we still have this previous high right here, so which means we have higher high, higher low, higher high, we might have it as a higher low before the market either goes to create the new higher high, or it can makes the what, the double top before it goes down. So it all depends ukuthi kuzokwenzakalani in the long run. But for now, we have to concentrate on what we see, on what we can actually try to look at and see ukuthi is it possible that we can trade something that looks like this. Okay. But when we change the time frame that week, it actually plays something else. It really kicks out that thing we were thinking of a double top. It really kicks it out. So let's just change. Let's just not think about that double top kind of thing. Let's just say this high get created this low, and then it went all the way up to create this high again right here. So now the market, you can say this was the correction, and then this was the impulsive, and then we can still say this market is currently in a correction until it breaks below this point. This is going to be a correction until the market breaks below this point, and then this is our high. So if this is the correction, therefore we're still expecting to see the market doing what? Pushing toward the upside. But we do not guess that the market is going to push all the way towards the upside or towards the 90% rule. We have to also look at the what is this, the structure at which the correction phase is going with towards the downside. Yeah, well, so let's just go to a 1 hour time frame. Going to a 1 hour time frame, we still need to study the structure, this structure towards the downside. So let's look at this structure. You would see, okay, remember this is the lowest point, that if the market breaks this point, then we are going towards the downside. And if the market is still within, between these two lows and highs, therefore we're still within the correction phase of the market, to say the market can still shoot all the way to the upside. So by looking at this, you can see we're still in a what, you can still say lower low, lower high, lower low, lower high, lower low, lower high, and then the market somewhere still here in the lower low. So we can see that we still had the break of structure somewhere around here. So the determining factor now is if the market breaks above this point right here, we might be going towards the upside. If the market breaks above this point, we might be going towards the upside. But how it looks right now, there's a possibility ukuthi the market retested the what, the previous high, the previous low, which is this, the market can actually respect this previous low right here. Let's see something. The market can actually respect this previous low right here and continue to go to the downside, So I could say this was the okay. I think since well the market, just that I do not want to take selling opportunities in a correction phase of an uptrend. It's a bit tricky because you do not know how long must you hold those sells towards the downside, because the market can sell, yes, from this point. If let's say we go to 30 minutes, the market can, yes, sell from this point and go down, only to find out that it's only coming to do what? It's only coming down to make a double bottom right here before it goes up. Actually, this high is very far. If this market can decide from this point to go down, therefore we will be expecting this. That if the market breaks above this high, this point right here is gonna be going up. If it goes down, if it goes down to this point, making a double bottom, and then if it comes and break above this high, then we would know what the market will be going up in a way that ukuthi izosinikeza a retest of this previous high, and then it's gonna be able to shoot even more and go up. something like this, something that looks like this, guys, something which looks like this. So we just want to see ukuthi will the market retest this previous high la and see what is your pansy, and then if it does go down and fail to break below this point right here, therefore which means we will be anticipating what the market might come down and make some sort of like a double bottom before it can even go up. So this is what I can say so far go gold, guys, because the way it looks, this is, to me it looks more like a reversal pattern to say the market it can go all the way up again. Yabo? To me it looks more like a reversal pattern to me. And then again, a reversal pattern it's allowed being in a correction phase, because this was an impulsive phase from this low to this I was an impulsive phase. Therefore, this is the correction phase. So we have to study the correction phase in such a way that we are looking buying up for buying opportunities. We can't be studying the correction phase and still be looking for what? For selling opportunities. You can't look for sell opportunities in a correction phase of an uptrend. It doesn't really make sense. You see, it doesn't really make sense. So that's what I'm saying, that Mina, I'm looking for buying opportunities in a correction phase of this gold. So far the setup that I can think of, it looks like this. So I will see ukuthi kuzokwenzakalani. We will see ukuthi kuzokwenzakalani. So let's just put it on watch list and watch it how it plays out tomorrow. And then if it gives us what we want, we take the trade. We take the trade. So the best trade will be at this point, right? But this one is more like a safe entry, and then the risk entry is gonna be when the market breaks above this point right here. If the market decides to, if the market decides, but it's not like it's going to be a risk trade as such. As long as it respected this double bottom, as long as it's gonna respect this double bottom right here, as long as it's going to respect this double bottom right here, when it breaks above this trend line, you can take that risk. Mina, I do take such risk, guys, only if the market broke that trend line with a very strong big candle. Then I do take. I don't want to see the trend line being broken by that small candle. But if the market can reject this and give me a strong push like this, I'm gonna take this trade. These are the trades that I take risk of. I do risk to take such trades. Yeah, well, so if the market really does come down, give me some sort of like a double bottom. If it pushes up with a strong candle and closes above this, I'm gonna take this trade and say buy. Yeah, well, so yeah, it is one of those things. So yes, I'm going to gonna upload this on my YouTube channel, guys. 13 minutes gold setup. Then you will just go and check it out.